everyone. This is Dr.D.Kiruthika, Department of Commerce CA, Dr. S.M.S. Radhakrishnan College of Arts and Science. A warm welcome to my YouTube channel, Learn to Win. I hope you have enjoyed all my series which I have given you previously. Today we are going to discuss about a very interesting topic, that is your stock market. So in this particular video, we are going to discuss about your meaning, definition, and the historical evaluation of the stock market. Shall we enter? Yeah. What is your stock market? So what do you mean by the stock market is where the investors buy and sell the shares of the companies. It is a set of exchanges where companies issue shares and other securities for trading. It also includes over the counter, that is we say in short as OTC marketplaces, where investors trade securities directly with each other rather than through a exchange. So the stock market is a regulated financial system where publicly traded companies issue securities to raise the capital from individual and institutional investors. These investors buy and sell the shares on stock exchanges in hopes of earning returns through the dividends, capital appreciations, or both. The price of each share is determined by supply and demand, influenced by various sector factors like your company's performance, overall market conditions, and investors' sentiment. I think you are able to understand what is the stock market is. What are the basis of the stock market is owning a piece of the pie. That is, we are the real owners of the stock market. So we are going to own a piece of the pie which is going to be handled by the business, which is earned by the business. So the shares represents a fractional ownership in a company. By buying the shares, you can become a shareholder first. And the next one is your dividends. Some companies share profits with shareholders through regular payments. That is known as your dividends. That is from the profit, we are going to get back the money, that is the share, that is the reward what you are going to get for the investment what you have made in your shares to be proper. The next one is your voting rights. In some cases shareholders can vote on company's decisions according to the shares, the type of the shares which you are holding. And then next one is your supply and demand drive prices. Issuers, the companies sell shares to raise the capital. Their main aim is to raise the capital for which they are going to issue the shares. When investors, individuals or institutions buy the shares hoping their value will be increasing. And then the share price determined by the supply and demand like an auction. Then key players in your marketplace is your brokers, exchange and regulators. As you all know, the brokers are the connect investors to exchange and execute the trades for a free. And then exchanges, we have many exchanges where we can share, we can buy the shares or we can sell the shares. For example, NYSE, NASDAQ, etc. And then the regulators of your marketplaces oversee the market to ensure the fairness and transparency of the shares which is dealt in the market. Then investing goals and strategies. Growth investing aims for the capital appreciation. Whatever we are doing mainly for the purpose of capital appreciation. And then income, focus on regular income through the dividends. Then diversification, spreading the investment across different companies and sectors to manage the risk. And then getting started wisely, that is learning the basics. Before investing, you have to educate yourself about the market dynamics and risk, and choose a broker, to reputable broker that aligns with your needs and the budget. Everyone will not be very familiar with the market, so we can take the help of a broker. And then we have to start small, that is begin with a modest investment and gradually build with your portfolio. I think you can understand what is portfolio. The portfolio is nothing but the combination of your securities. So we have to start with a small investment and we have to gradually increase ourselves to the portfolio. And then manage risk, understanding your risk tolerance and the investment responsibility. We have to think that is there will be a risk everywhere. So we have should improve ourselves to manage risk. Then historical revolution is the stock market is facilitating journey. That is a historical evolution. The stock market is a complex and sophisticated system, but its humble beginnings date centuries ago. That is on a journey through its historical evolution, you can see the at the earliest, that is 12th to 16th centuries, first we had the barter system, that is exchange for goods, and for the goods we don't have any money value. And then we have improved with the joint stock companies, where the share ownership emerged in the 16th century with the formation of the joint stock company like the Dutch East India Company. They are the former in the market, and the investors bought shares to finance voyages and expeditions, sharing the profits and losses. And then the birth of the modern markets improved in the centuries of 17th to 19th centuries. And then we can see that Amsterdam Stock Exchange 1602 and the London Stock Exchange the 1773 has improved. And then the next one is your Industrial Revolution. The 19th century saw the Industrial Revolution fuel the growth of the companies and constantly the stock market. And in the 20th century, we can see the globalization and innovation. The Great Depression and regulations, that is in the 1929, Wall Street crash highlighted the need for regulations. And the Securities Act of 1933 and the Securities Exchange Act of 1934 aim to protect the investors and promote market transparency. And we can understand there is a technological advancement in the century, that is 20th century, with electronic communication, where we had a globalization and we have improved our investments through cross-border investments. And in the 21st century, digitalization and new frontiers enter, that is your online trading, fintech and innovations have been improved. So this is the historical evolution of the uh, your stock market. We are yet to watch with some more videos regarding your stock market. So kindly stay in touch. Thank you.